RIA. Isabelle Lee and Tom Keene getting you started across the nation this morning. Joining us now, time for an audible. Darius joins us, founder, CEO of 42 Macro here. His view on the market, very active out on Twitter with some really intelligent ideas. I want to get to that in a moment, but nobody cares. You were definitive at Yale University with the Yale Bulldogs, your family heritage of Jerry Rice, and all that. How does the Ivy League football change now that they can go to bowl games? You didn't have that. It's a whole new world for the Ivy League, isn't it?
Indeed it is. I've been saying for many years that the best teams at the FCS level are traditionally Ivy League teams. We just haven't been allowed to compete. We're going to see.
And we're going to see. It makes Yale, Harvard doing better now. Thank you, Boston, where we broadcast Harvard football games. We got to broadcast New Haven. Good morning, New Haven, is well. I mean, it makes Harvard-Yale different this year, November 22nd.
Well, absolutely. Unfortunately, Harvard's got a guy at quarterback this year as well. So our defense is going to be plenty busy.
Okay, let's talk about your market call. I love this. It's hugely controversial. The traditional 60-40 model is broken. What replaces 60% equities, 40% bonds?
Yeah, I think the equities portion of that portfolio is very much still intact. We believe the administration is pulling a lot of levers to create a transitory boom in the economy. However, on the fixed income side of things, we continue to identify, our research continues to identify what we call a geopolitically driven supply and demand imbalance in the Treasury bond market. Now, that doesn't mean that there's going to be any sort of financial Armageddon in the financial sector. However, we do believe the Treasury bond market is a melting ice cube from this starting point. And so you're going to see, in our opinion, more and more institutions adopt gold as an alternative, as a safe alternative from portfolio construction perspective. And then, in our opinion, that's part of the reason why the gold rally has been so relentless.
What do you make of the debasement trade? How much credence do you give that when it comes to the current macroeconomic environment? Yeah,
well, in our opinion, the debasement trade hasn't really even started yet. In our opinion, this is an institutional portfolio reallocation. If you think about some of the dynamics in the Treasury market that are very unsupportive for the 40% of that 60-40 portfolio, term premium are about 100 basis points mispriced in our opinion. We think the inflation pricing is about 50 basis points mispriced in our opinion. And ultimately, the positive stock-bond correlation that is likely to persist as it persists in this environment of elevated inflation, those three dynamics are working against investors who have a lot more exposure to Treasury bonds at the starting point.
What about private markets? Do you see them replacing any of those in the 60-40?
Yeah, absolutely. And that's exactly something we identified in our flagship investment strategy 3 years ago, that we initially, when we outlined the strategy, that investors need to have at least 10% of their exposure in alternative asset classes. If you think about the size of this problem, which is the rest of the private non-bank sector owns too many treasuries, foreign investors own too many treasuries, ultimately the institution that's going to have to step in and fill the void is the Fed. And ultimately, in our opinion, alternative assets benefit from that.
We continue with Darius Dale of 42 Macro this morning. Isabelle?
So this is also something that caught my eye. Your model sees a 50 to 75% crash risk in the medium term, which you call moderate. But I thought, oh my God, that's kind of big, especially with all the bullishness and the frost that you see in this environment. So what would trigger that downside?
Yeah, that's a great question. I love that you framed it that way. So historically in our model, when we get above a 75% threshold in terms of the indicators that have historically correlated to the tops and bottoms of major market cycles, that's typically when you need to start raising your antenna. However, the positioning cycle in and of itself is not a catalyst for markets. The growth cycle is a catalyst, the inflation cycle is a catalyst, monetary policy, fiscal policy, and liquidity. 4 of those 5 cycles are moving in a positive direction. 1 of those cycles is moving in a negative direction. But in our view, what we see is structural regime change at the FOMC next year is likely to overwhelm the negativity from the inflation cycle.
There is raging battle this weekend over all the day trading, the kids with the laptops in and out. Now, you're doing a serious institutional effort at 42 Macro. But he's young enough, Isabelle. So have you ever sat on a couch with a laptop and day traded?
No.
It's a mobile phone, Tom. Not everyone uses a laptop.
I'm clueless. I mean, thank you, Isabelle, for straightening me out. What is that, the 5th time today, John? Quickly, Darius, what do you say to the kids on the couch with a mobile phone?
I say to the kids on the couch that at some point you're going to have gray hair and you're going to need to retire. And so if you're going to retire, you want to do it on time and comfortably, and you're not going to day trade your way into an on-time
More than ever,
retirement.
you need an investment approach and then enjoy the speculation on the side.
Amen.
I would say it's never been more.
Amen.
Now, what's the number one mistake in rebalancing you see? What's the Yale mathiness of over rebalancing?
Not over rebalancing. The number one mistake I see is something you call out on your show all the time, Tom, which is people go to cash and they get stuck there.
They can't get back in.
They can't get back in. They can't get back in. You need to use some sort of system that gets your cash allocation to go up and down, not just up.
Darius, don't be a stranger. Darius Dale with us with 42 macro this morning. He lifts them. Do you see how Darius lifts the markets? It's unbelievable how he does that. Futures up 28 right now. NASDAQ up 0.5%. With our news in New York City, Michael Barr.